human allocators can now be surpassed with machine learning algorithms, at least your one. Is that overstating the case, or is that the case? Because it's quite the claim.
No, it's actually quite accurate, and it's very fascinating with respect to the opportunity that offers. So all of this is in the continuation of my academic work. We've been studying private equity empirically for over 25 years by now. Passionate about trying to understand drivers of risk and return in general, in particular those that reside with the fund manager. And as you say, it's non-trivial to find those drivers of returns because basically, from many other asset classes, there's the concept of the random walk. So yesterday's returns have nothing to do with tomorrow's returns. In private equity, we could look at this a bit more nuanced. If you just look at the stability of returns, is a fund that was, fund manager was top quartile somehow in the past, are they top quartile again? That's unstable to say the least, depending on who you ask. If you, however, look at past performance as so much as it's maybe indicative of certain underlying skills of the fund manager, or you measure then components of performance or certain elements in the track record that are signals of skill, it seems intuitive that some of these skills likely persist over time, and they may be valuable in the future in the sense that they may be the source for subsequent outperformance. A lot of my work is looking at those persistent indicators of skill, and you can easily imagine that while it's been for the Gottschalg Analytics business very powerful to measure those skills, paint a picture of the different chromosomes of the value creation DNA of a fund manager, and put this in front of human decision makers to assess what's the skill set I see, is the skill set likely to persist? And is the skill set likely to be valuable going forward? It's now a natural evolution to say, well, let's take a related set of even broader and more complex indicators of skill, subject this to machine learning techniques, and basically look lots of historic data in order to identify a predictive ability for performance drivers of various parts of private equity. And that's indeed fascinating because that's a game changer with respect to how I believe private equity is going to go about allocating capital going forward.
And so you've done that, and what's been the result?
We see very clearly in the backtesting that had an investor been using the models that we've been building and that actually were on the table in 2018, 19, 20, the investment outcomes of those algorithmic investment decisions were vastly superior to at least a majority of investment decisions that I observe in the market done by normal private equity teams.